Hey, good morning and happy Monday to all of our options traders. And I gotta say that while I was recording this video, had a bit of a deja vu moment. Seems like I've done this topic before, but I went through the archives and I can't find it anywhere. So it's either from a different course or maybe tacked onto the tail end of a previous one, but it's an important enough topic on its own that it deserves its very own video. So we're going to do it again. I apologize if we've talked about it before, but it's an incredibly important topic for options traders. It's a very famous problem in statistics called the gambler's ruin. So what's this all about and why is it important for options traders? Let's go take a closer look. As always, before we do, please be sure to click like and subscribe. It's greatly appreciated and helps to promote the channel. So the gambler's ruin, it's shown in a lot of different ways, but they all have this same idea. A lot of times it's done with a drunk guy meandering back and forth along the edge of a cliff. So we'll use that. It's again a very common example. So here's our drunk guy. Actually looks more like a drunk mouse, but it's some type of creature that's meandering left and right in a drunken state. So it's a 50% chance that he moves to our right, a 50% chance that he moves to our left. Now, the question is he going to stay safe? So let's put some hash marks on here so we can count each step, and if he ever hits the red mark, he's over the cliff. Too late. Well, it's a good question. Is it always going to be the case that he goes over the edge? Is it possible that he somehow keeps meandering far enough to the left that he ends up staying safe, possibly forever safe? Well, it's a good question. And for this one, this is actually called a one-dimensional random walk. We're assuming that he can only move left and right. He can't walk towards us or away or off in a different direction. Always moving just left or right. So to demonstrate, let's just assume that we flip coins to determine if he's going to step to the right or to the left. Remember, this is a drunken mouse, and so there's no rhyme or reason. So a good way to model that would be with a coin flip. So I went to Excel and I did a simulated coin flip. So let's say that one is heads or to the right, tails is 0 or to the left. So let's see what happens with this sequence. So we start off here to the right. Not too good, getting close to the edge. Now fortunately he got 3 tails here in a row. So there's 1, 2, 3, moving nicely away from the edge. But then he got hit with 1, 2, 3, 4 heads. So there's 1, 2, 3, 4, getting dangerously close. Now luck is with him here, got a couple more tails. So 1, 2 to the left, another head moving to the right, and then finally tails to the left. So again, the question is he going to go over the cliff? And if so, would he always go over the cliff? Or could he ever get to a point where he's going to stay comfortably safe? So that's what we're trying to figure out. Is he going to go over the cliff? So to figure it out, let's just say that for any position that he is on the cliff, there is a certain percent that he will stay safe. That's what we're trying to figure out. What's this percentage? Now, he can either step this way to the left with 50% chance, and that's going to give him a better percentage of staying safe. Or he could move to the right. He will get a different percentage, a lower chance of staying safe. But for any percentage, we've got B percentage to the left and C to the right. But what we do know is that there is a 50% chance for either one. And that gives us some good information. So now, what other piece of information do we know? We know that if he goes over the edge, there's a 0% chance that he's safe. What does that tell you? Well, if he's right here on this last hash mark, there's a 50% chance he's going over the edge and a 50% chance he's going to move to the left and at least stay safe for the next step. Well, okay, if he has a 50% chance of staying safe here, one step to the left would be 100%. How do we know that? Well, remember, this percentage here, 50%, must be 50% of this number plus 50% of this number. So if we're going to assume that this is 50%, which it is because remember this is a coin flip, then this must be 100 because half of 100 is 50%, half of 0 is 0%, 50 plus 0 is 50%. So if this is a 100% chance, which already sounds strange, you're only 2 steps away, how could you have a 100% chance of being safe? But let's keep going with it. We would see that this would be 150% because half of 150 would be 75, half of 50% would be 25, 75 plus 25 would give us 100, which is what that is. But we can't have probabilities greater than 100%. So this simply cannot be right. So that should just tell you that it can't be 50%, even though we know that that must be the answer right there. But just for fun, let's try something smaller. What if it's maybe a 10% chance of going over at this stage? Well, again, because of this averaging property, that means that this percentage must be 20%. Because this number here in green would be half of this, half of 20% is 10%, plus half of 0 is 0, which would give us 10%. And if this is 20%, it must be the average of these two bookends here, right, on either side of it. So that would have to be 30%. Half of 30% is 15, half of 10 is 5, 15 plus 5 is 20, gives us again right there at 20%. And that means that this number over here, this percentage, must be 40%, and this one must be 50%. Each step is going to be 50% of the two neighbors. Well, what's going to eventually happen? You can see we're just going to keep counting by 10, 60, 70, 80, we'll eventually hit 100%, and that means one more step to the left and you've exceeded 100%, which we can't. So it turns out there are no numbers that will work except for one, and that must be 0. The only number that will allow you to do this averaging property and to be mathematically true is 0. There's a 0% chance for him to stay safe, and interestingly, no matter where he is or no matter where he starts. That's even more startling. What if we started him 100 spaces back this way to the left? Chances are 0 that he's going to be safe. He will go over the cliff. What if we started 1,000 steps back this way? 0% chance. What about 1,000,000 steps? 0% chance. That is just a fact of a random walk. Random walks always come back to 0. It's called the absorption rate of a random walk. So to see this from a different perspective, let's bring up an Excel spreadsheet and look at a random walk with coin flips. Okay, we've seen this before in previous videos. This is a random coin flipping simulation, betting $1 to make $1, even odds here, 1 for 1, but it's for 10,000 tries. So imagine that we're sitting here flipping coins. Every time I win, I get $1. Every time you win, you get $1. And this black line is just keeping tabs of my profit and loss. So you can see that at this point, I actually was up over $100 after 10,000 tries at this game. So in percentage terms, pretty small percent. But at any rate, as we've talked about in other videos, this will eventually come back here to 0. It has to. But as we've also talked about, it doesn't just oscillate back and forth. We can go off on very extended runs because at each point, they're not committed to the same mean. So we can stay up here for a while. We could actually hit up to 200. This is plus and minus 2 standard deviations, by the way, in red. In green, plus and minus 1 standard deviation. So let's try another one, and we can see again that we will eventually come back to 0. Let's try a different sequence, and came back to 0 here, went into some losses this time, came back to 0. Went into losses, back to 0. Got into some gains, back to 0. Into some gains, back to 0. Got off into a nice little, almost up to $100 back here, but eventually we would come back here to 0. Try another one. This time it looks like I almost stayed in losses the whole time, got up to zero, maybe here, a little bit through here, but basically was underwater. But that doesn't matter. If we sit there long enough, I will eventually get back to zero. Here's another one. Look at this, got all the way up here to plus 150. Doesn't matter. If we sit there long enough, we will eventually come back to zero. So now this is a property of random walks. Pick any two numbers, let's just say plus 100 and minus 100. We will go through those two green lines an infinite number of times if we sit there infinitely long. Pick two more numbers, plus and minus 200. We will go through those an infinite number of times if we sit there long enough. What if these were plus and minus 1,000? Yep, same answer. You will go through them an infinite number of times. So now go back to our drunk mouse on the cliff. This is just kind of a different perspective of it. But why couldn't we step, let's say, starting back at 100 places? Doesn't matter. He'll eventually come back to zero. What if we started him 200 steps away, up here? Doesn't matter. He'll eventually come back to zero. See, the coin doesn't know that it started at zero and got up here to 150, or if you started at 150. There's no difference. Just the fact that you're here, you will eventually get back to zero. That's all that matters. So what's really interesting is that it doesn't matter what these numbers are. You could make these 10,000, make them 1,000,000. You will eventually come back here to zero. So this is the gambler's ruin problem. And this is even with a fairly valued game. 1-to-1 odds, betting $1 to make $1. Now, as I've shown before, if this were not a fairly valued game, like in a casino, let's say that you have to bet $1 to get maybe 90 cents. So getting a little bit less than fair value for your payoff. What happens now? See, you can see you are absolutely going below zero. You're just going to do it much, much sooner. So you have to remember this is for a fairly valued game that you will still eventually go to zero. So why is this important for options traders? Well, for options traders, we have a commission to get in and generally a commission to get out. That's just for a single leg. You get into butterflies and condors, you've got multiple commissions in and multiple commissions out. And that is greatly going to start stacking the edges against you. But even if you didn't have commissions, you still have this problem that if you sit there long enough, you will eventually go to zero. And so now you should see the importance of it. The big implication is you've got to be super careful with the short-term trading, getting in and getting out, picking up nickels in front of bulldozers. If you really want to survive the game, let compounding work for you, put time on your side, because there we have a long-term upward bias. And that's putting the wind at your back, it's picking the low-hanging fruit. You might as well get all of the easy things that you can in your corner. But sometimes people don't really understand why, or they say, hey, it's just fun, I want to sit here and day trade. But always remember the gambler's ruin. No matter how good you are, or how good you think you are, even without commissions, you will come back to zero. Take the long-term view, learn how to hedge, roll, and morph, and you'll have much better success with investing. And for anyone who'd like to learn more about the arts and science of options trading, please check out the Alpha Trader course, Strategy Lab, and a candlesticks and technical analysis course. It's all at optionsatoz.com. Also, please join us on Options A to Z's Facebook trading group, and you can find a link in the description below.